Hello, everyone, and welcome to today's virtual non-deal roadshow. My name is Turenne, and I will be your virtual event moderator for today's presentation. On behalf of our entire team, we'd like to thank everyone for joining us today, and especially those of you in Vancouver and surrounding areas for the presentation of FPX Nickel Corporation, trading on Toronto Venture Exchange under ticker symbol FPX. And now I'm pleased to present to you President and CEO Martin Turenne.
Great. Thanks for the introduction, and hello, everyone. Good afternoon. Thank you for joining our session today. I'm Martin Turenne, President and CEO of FPX Nickel Corp. We'll be talking a little bit about the nickel market at the outset, and then we'll get into some company specifics. So who is FPX? We're a Vancouver-based company. We're 100% focused on a very large nickel district that we control in central British Columbia. The land package is called Descartes, and within Descartes, we have a very large advanced stage mineral deposit called Baptiste. We recently completed a PEA on Baptiste in September of 2020. The results of that study were quite positive. That study projects that Baptiste would be one of the world's 10 largest nickel mines in terms of annual output, around 100 million pounds of nickel production per annum, on a resource base that would support that rate of mining for in excess of 35 years. The PEA also projects that we would have very low operating costs at US $2.74 per pound of nickel, which would place us within the bottom quartile, of the cost curve for the nickel business. And finally, we're very well located, and we believe the project has some very important credentials from an environmental standpoint. In particular, we see the opportunity here to develop an operation that could produce nickel with the lowest carbon footprint of any nickel production anywhere in the world. That's something we'll talk about a little bit later, but we think it's a key differentiator for our project, is that ability to produce nickel at a very low carbon intensity. Before we get into the company, I'd like to take a few minutes just to talk about the nickel market. This chart shows the last 15-year snapshot history of the nickel price and of the surplus or deficit in the nickel market on a year-by-year basis going back to 2006. So you can follow that red line and see what the average annual price over that period of time has been. You see the spike in 2006 and 7, where the nickel price actually reached $24 US a pound on a spot basis in that period as a result of the consumption related to the Chinese commodity supercycle. Within a few years after that, that led to development and construction of a lot of new nickel operations to take advantage of those high nickel prices. And as often happens in the mining market, that led to an oversupplied market, as you can see in those blue bars between 2010 and 2015, which then led to a decline in the nickel price. Nickel price has been in a state of recovery really since late 2015, early 2016, and now sits at over $8.50 US a pound. And as you can see from the forecast here, the nickel market, after a temporary oversupply due to reduced economic activity associated with the pandemic, is set to return to a state of long-term structural deficit in the coming years. And that suggests that the nickel market needs new mine supply in order to square the market. And that's where we believe a project like FPX's Baptiste Deposit fits in as one of the few advanced stage nickel deposits in a strong jurisdiction anywhere in the world that can provide sort of meaningful amounts of nickel supply to the market going forward. Just delving a little bit deeper on nickel demand, and you can see here in the left-hand pie chart that stainless steel demand accounts for around just under 70% of current nickel demand, whereas batteries are only at about 6% right now. And that would be, again, nickel used in electric vehicle batteries is the primary driver of that consumption. However, based on projections for electric vehicle demand growth, which are seen to be considerable, you can see that by 2030 and by 2040, the battery portion of demand will grow to 26% and then 36% by 2040. So what you have with EV battery demand is, a source of new demand that effectively didn't exist a few years ago. Now is projected to represent a very significant proportion of overall nickel demand. This is at the same time that the stainless steel market will continue to grow. It's been growing at about 5% per annum over the last several years. And I think most nickel market analysts see it growing at a similar pace in the future. So you've got a very strong established base of demand of stainless that's growing, effectively new source of demand from batteries that is supercharging the overall size of this demand pie. Glencore, the major company, recently put out a very interesting slide here, which is summarized here, looking at the impact of the movement to green energy and to electrification of our economy and the implications of that for metal demand, for the various metals that they produce. And so you can see that, for example, the copper market is expected to grow by about 2 times between now and the year 2050. On the other hand, the nickel market over that same period of time is expected to grow by 3.7 times, almost double the growth proportionally for nickel as is projected for copper. And that really reinforces our view, and I think, and the view of many market analysts, that it really is nickel that is the ultimate sort of EV metal, and particularly for a base metal with a large, underlying size. The cobalt market will certainly benefit from EV demand growth going forward, but the cobalt market is quite small, whereas the nickel market, of course, is one of the largest sort of existing base metal markets, and so provides a bit more protection against the volatility that we've seen in the cobalt and lithium markets over the last several years. BHP has also come out with recent projections very much along the same lines as what Glencore is positing. And again, over the next 30 years, BHP is seeing a 350% demand growth for nickel versus something in the range of 200% for copper. So nickel, in our view, really is the way to play that evolving battery energy transition narrative. So coming back to FPX and just giving a sense of, first of all, where our project is located. So as I alluded to, we control a district scale land package called Descartes, located here in central BC. You can see we're a couple hundred kilometers northwest of Prince George and about 80 kilometers to the west of the Mount Milligan copper gold mine, which is a large scale copper gold operation that's been in operation for several years. Importantly, we're also about 200 kilometers north of the Blackwater project. That's a feasibility stage gold project that recently received its federal and provincial environmental assessment certificates. And we believe that project sets a very strong precedent for the ability, ultimately, of FPX to permit the Descartes district for operations going forward. Descartes is truly a district. It covers 245 square kilometers. Within this image, at the southern portion of the image, you see the Baptiste Deposit. Baptiste has a footprint representing, 1 to 2% of the overall land mass of Descartes. And Baptiste has already been delineated as one of the world's largest nickel deposits. As I noted earlier, the resource, which is certainly open to expansion, particularly at depth, already is large enough to support a 35-year mining operation. Elsewhere within the land package, we see at the SID target and at the B target opportunities for further resource delineation of potential standalone deposits there. And certainly limited drilling in the past has returned very strong grades as compared to what we see at our Baptiste deposit. Approximately 6 kilometers north of Baptiste, we've also identified the Van target. That area that's shown as shaded on this map represents an area where we've taken surface samples of outcropping bedrock mineralization. And that bedrock mineralization covers an area target footprint of about 3 square kilometers. And it's important to note that the grades at Van are also higher than what we see at Baptiste, about 10 to 15% higher at surface in those nickel grades. So the Van target actually represents a higher grade target and with a larger target footprint than Baptiste, but it's never been drilled. So one of the things we're most excited about this year is getting up to Van for an initial drill program this coming summer. The potential that we could delineate another world-class, world-scale ore body within the land package, one that has, in our view, high potential to be larger and or potentially higher grade than Baptiste. So there is very much a discovery element that we're quite excited about for the project this year. This slide gives a representation of the open pit plan for the development of the Baptiste deposit, as summarized in our 2020 mineral resource estimate and PEA. And you can see that the center of gravity of the deposit from a grade standpoint is in the southeastern portion of the deposit. This is also the most recent area of drilling, and it's something that has been the key to sort of unlocking the value and allowing us to develop the sort of the starter pit within this portion of the ore body. The style of nickel mineralization at Descartes and at the Baptiste deposit is rather unique. This is neither a sulfide nor a laterite deposit. The nickel is hosted in a nickel iron alloy called awarenite. You may be able to see in the image of the core here the small reflective or silvery white grains. Those are the grains of a wearowhite, which is, as I say, an alloy of nickel and iron, 3 parts nickel and 1 part iron. The key advantage of this style of nickel mineralization is twofold. First of all, it is hosted in a very clean host rock setting that is almost completely deficient in sulfur, any associated penalty elements, and I'll speak to the importance of that in a moment. The other kind of key property of a wearowhite that's highly advantageous is it's a highly magnetic mineral. That allows for a very easy recovery of the mineralization from the host rock using magnetic separation and flotation to produce a very high-grade nickel concentrate in the range of 63 to 65% nickel contained. So that would make this effectively the highest grading nickel concentrate in the world. So that simplicity of metallurgy then feeds into the production, as I say, of this very high-grade concentrate with very low penalty element content. And it's a concentrate that, given its high metal content and low levels of impurities, is readily amenable for sale to end customers. Most nickel products, particularly nickel sulfide concentrates, have to be sold to smelters. And so when nickel miners, in those cases, sell to a smelter, they have to accept quite punishing payment terms that really sort of risk undercutting the economics of those mining operations. In the case of our Baptiste Deposit, by producing this very high value, very clean concentrate, we can actually bypass smelters altogether with this product and sell it directly to end users in either the stainless steel market or in the battery market. And as such, we can achieve significantly higher payabilities and therefore significantly higher revenue than sellers of typical traditional nickel sulfide concentrates. This chart kind of gives an overview of exactly that point. You can see at the top of the chart, a typical nickel sulfide concentrate would contain about 15% nickel content. That's what's shown by the red bar here. And the blue bar shows what typical payabilities are achieved. So in the case of the sulfide concentrate, those payabilities are typically in the range of 70 to 75% as products are sold to smelters. The Baptiste ferronickel product that we can produce, based on being able to sell it directly to end customers, again, either in the stainless market or in the battery market, can yield payabilities upwards of 95 to 98% of the LME nickel price. And so the importance there is the ability to get paid at a premium level and to ensure kind of a high margin operation throughout the nickel price cycle, regardless of what's happening in the spot price. This slide summarizes at the very top some of the work that we've done to show that our product is highly amenable to being recovered into nickel sulfate, or NiSO4. Nickel sulfate is the battery chemical that actually goes into the cathode of an EV battery. And typically, depending on the ore type that you're dealing with, there's a very long and complicated process to refine nickel to the point where it's at a high enough purity and in a form suitable for those EV batteries. What we've done in testing with Sherritt Technologies out of Alberta over the course of the last 12 to 14 months is that our nickel concentrate, given the high nickel content and the low impurities, is an ideal feedstock to producing nickel sulfate. And so we will continue to work on that this year, and we'll have further news to the market to really highlight the amenability of our product to that EV battery market and show the really nice flexibility that we have to produce products, again, either for the stainless market or for that battery market or for some combination of the two. So our 2020 PEA profiled a project, as I alluded to earlier, that has very, very attractive economics. So at a nickel price assumption of $7.75 per pound, the project yields an after-tax net present value of US $1.7 billion. The nickel price today is in the range of $8.80 a pound. And at that nickel price, the NPV of the project would go up to about approximately 2.4 billion US. So the project does offer significant leverage to upward movements in the nickel price, and both from an NPV and an IRR standpoint. You know, one of the highlights really of the PEA that I think demonstrates the kind of the robustness and captures the robustness of this project is the operating cost profile. As I alluded to earlier, at US $2.74 per pound of nickel contained on a C1 basis, this shows where we'd sit on the global industry cost curve for the nickel market. And we would sit, well within the bottom quartile or the bottom 25% of the nickel market cost curve, which is a very advantageous position. And again, I think sort of speaks to the ability to be profitable throughout the entire nickel price cycle. The nickel price hit a low over the last 15 years of about $3.50 a pound in late 2015. And so at US $2.74 a pound, this project would still be profitable, and in fact, very profitable on an operating basis. This is really not a call option on the nickel price. This is a project that we believe is robust through the entire cycle. And even if nickel prices moderate from today's level, we feel we have a very robust project. This slide gives a sense of where our Baptiste projects sits within the scale of other large-scale base metal projects globally. What we've done here is we've ranked these projects on the basis of what we call the Strategic Value Index. This is the ratio of the mine life to the payback period for various large-scale base metal projects that are in the market today. So mine life divided by payback. What we like about this metric is that the cream undoubtedly rises to the top. The strongest projects in the world tend to have this high ratio in this regard. You can see those projects that are higher than us on this list are typically have either been acquired by major companies or sit within companies that are valued in the hundreds of millions and in some cases billions of dollars. This chart we find very useful to highlight the kind of the world-class nature of Baptiste. And that's to say nothing, of course, of the exploration upside to find other large deposits within our overall land package. With respect to capital cost, this is certainly going to be a high capital project. At US $1.7 billion, we well understand that this is a project that will require significant capital. However, this slide kind of gives a bit of a sense of how that fits in, that capital fits in within the context of other large-scale nickel projects that were put into production in the last cycle. So these 7 projects that are shown by the blue bars here, these projects were developed largely by the diversified major companies, the Glencores, the Vales, the BHPs, et cetera, in the last major cycle of nickel mine construction between 2010 and 2013. Those projects had an average capital cost of just under $4 billion US. So it is inherently the very nature of nickel projects of this scale that they are high capex. And so in that context, the capex for Baptiste actually ranks quite favorably. Back to the point on valuation, this is another way of looking at base metal projects and the underlying equities. This slide is one that shows the ratio of market cap divided by project net present value for various base metal project explorers and developers, largely listed on the Canadian exchanges. What you can see is that projects at our stage of development at the PEA pre-feasibility stage typically trade at a multiple of 0.15 to 0.2 or 15 to 20% of the overall project value. At our current market cap of about 150 million Canadian, you can see we trade at about a 0.06 multiple. So we see an opportunity here with continued advancement of the project, continued kind of branding and awareness to re-rate up to the midpoint of the peer group. And again, that really doesn't give us any credit for any of the exploration upside that we see those other targets, which could add significant tons and potentially higher grades here through the drill bit as we go. I also mentioned earlier the ability of this project to produce nickel in a way that would have a very attractive profile from an environmental standpoint. And that's as measured predominantly by the carbon footprint associated with nickel production. So there is actually quite a lot of good public academic studies measuring the CO2 footprint of various nickel mine operations globally. And what we can find here is that by and large, nickel production tends to be a heavily carbon emitting enterprise. That's certainly something of interest, I think, to ultimate consumers, particularly for EV battery consumers. We've put out some recent disclosure showing the projections of the carbon footprint associated with nickel production from Baptiste. As you can see on this screen, that would be very low indeed. And in fact, has the potential to have the lowest carbon intensity of any different type of nickel production globally. Why is that important? Well, as noted at the bottom of this slide, the European Union has recently come out with some guidance stating that by 2027, in order to be able to sell an EV battery in the EU market, that battery will have to have a carbon footprint certification. And the carbon footprint associated with the production of that battery, including the metals extraction that are inherently part of that carbon footprint, will have to be below some certain threshold, which means that if you want to sell EV batteries in the EU later this decade, then nickel and the other elements that go into that battery are going to have to be coming from a clean source. So what we believe is that will actually ultimately shut out certain different types of nickel production from those markets and have great implications, I think, for the pricing power that clean products like ours will have in the marketplace. So this is an area that is not just about kind of a feel-good environmental story, but it will have a profound impact on where and what price you can, where and in what markets and at what price various producers can sell their nickel products. And so our ability to have a very low carbon footprint here is a huge strategic advantage that can't really be overstated. Beyond what we see as being very low gross carbon emissions from our project, we also have been doing research work at Trent University and predominantly at the University of British Columbia to show that our tailings are uniquely well positioned to be able to sequester through a natural process of air capture a significant amount of carbon dioxide. So our tailings can effectively act as a large carbon sink and sequester significant amounts of CO2 and thereby reduce our carbon footprint even lower than what the previous slides suggested. So we've been providing some good data to the market, reporting on the testing that we've been doing in that regard. We will continue to advance that and expand that testing this year and in future years and provide that data to the market to really understand this proposition that our operation could ultimately work towards being a carbon neutral operation, which would be a significant and frankly milestone achievement for nickel production globally. 2021 promises to be the most active year for FPX in many, many years. And it really follows sort of a dual track strategy. See the items here listed on this slide showing what our planned activities are. As I said, it kind of falls under two broad categories. The first is initial early work streams on completing a pre-feasibility study on the Baptiste, real focus on metallurgy and ultimately on production of nickel products and cobalt products for the EV battery market on a test basis. We're also going to do some market evaluations to understand the potential for selling an iron byproduct here. The PEA that we did in September showed that we could produce significant quantities of an iron byproduct. However, for the purposes of that study, we didn't include any financial benefit or any byproduct revenue from that stream. We do foresee the potential development for that this year, and we'll have further research and studies to understand whether we can unlock the value of that iron byproduct this year. The other part of the strategy really is on new exploration and new discovery potential within the land package, particularly at the Van target. We have about a 3,000 meter program planned, which is a relatively modest program in terms of the meterage. But given this style of nickel mineralization is highly disseminated, highly homogeneous, we could actually prove up a very, very large resource on the basis of this drill program, which will be designed around very wide spaced holes. And we think we could delineate enough tonnage potentially to demonstrate we have a large ore body there and potentially even generate a mineral resource estimate off the basis of just a single drill program. Finally here, just wanting to highlight kind of our share structure. So FPX has been a public company since 1996 on the Venture Exchange. We currently have about 186 million shares outstanding. We've never done a consolidation or rollback of stock. I think that speaks to our discipline in managing the share count over close to 25 years now. Also important to note that we don't have any warrants outstanding on the stock. So even during difficult periods in the down cycle in the junior mining space, whenever we did financings, we did not issue warrants. There's no sort of lid in our view or no ceiling on the share price. Management holds a very significant proportion of shares here, over 20%. And that's something we're particularly proud of and I think shows high alignment with all shareholders in terms of our interests here. We've got cash of about $5.7 million, so we are fully funded for at least the next 12 months. And we have no debt on the balance sheet, having recently cleaned some of that up. So with that, I'll conclude the formal part of the presentation and open it up for questions.
Thank you for the presentation, Martin. And yes, we have now come to the question and answer session. Your first question, is there a shortage of nickel in the market?
Yeah, it depends kind of the time scale that you're looking at. You can see here from 2016 to 2019, there was a shortage in the nickel market. The market was undersupplied and was having to dig into inventories at the LME and at other exchanges. 2020, the nickel market was oversupplied given the economic damage caused by the pandemic. However, we see over the coming years that the market will turn back into a long-term structural shortfall that is actually, quite dangerous. Ultimately, I think one that could lead to kind of critical shortfalls in nickel, and in some ways lead to a risk that EV uptake could not be potentially at the pace that is otherwise expected. So building new nickel mines is something that I think the battery market, the auto industry is really pushing for. And we've seen that through some pronouncements from Elon Musk and others, that there's a certain sort of growing sense that we need to start building new nickel mines as an industry in order to solve that medium to longer term shortfall.
Do you see the price of nickel rising this year? And if so, what would you consider a realistic target?
Yeah, I mean, I think the nickel price has gone up higher than most people would have anticipated. You could see the analysts here were foreseeing a nickel price, frankly, at the start of the year of maybe $7, moving up to $8 a pound, and we're already well over $8 a pound. I'm not one to want to make forecasts on the nickel price. I would say that we're very happy at this current price level, and even at a significantly lower level, we believe the operation, based on the economics in the PEA, would be very profitable. However, it is important to note that in the last cycle, the nickel price reached $24 a pound. That was when EV battery demand didn't exist at all. You now have EV battery demand is going to be a significant proportion of overall nickel demand. And so what the implications of that are for price going forward, I would leave it to your imagination.
When will you have the resource estimates for cobalt and iron?
Yeah, so we are working right now to build up our database so that we can ultimately have an updated mineral resource estimate to be able to put that in the market. We don't have timing yet nailed down on exactly when we'll have that updated mineral resource estimate, but it's definitely watch this space through the course of the year.
What are the main hurdles that stand in your way in regards to developing Baptiste into the world's first large-scale carbon-neutral nickel operation?
We don't see any fundamental impediments to developing this right through to a construction decision and into ultimate construction and operation. There's obviously a lot of work that has to go in terms of all of the various feasibility studies, the engineering studies, and the underlying environmental assessments and permitting work, which, as we know in Canada, is a multi-year effort. With respect to the carbon piece specifically, we know this project will have a low carbon footprint. With respect to sequestration, there are several years left, certainly ahead of us, of successively larger laboratory and field-based testing to better understand that rate of carbon sequestration and to understand the engineering parameters that would lead to that significant amount of sequestration. Carbon sequestration is already observed in practice at the Mount Keith nickel mine, which is owned and operated by BHP in Western Australia. So the Mount Keith mine achieves that carbon sequestration through no particular efforts. It's simply a happy accident of their mining and tailings management process. So at the very least, we're quite confident that we'll be able to have significant sequestration at Baptiste simply by accident. But some of our work going forward will be oriented around understanding the engineering parameters to accentuate that rate of carbon sequestration towards ultimately potentially being carbon neutral.
If you have success at the VAN target, will the project timeline be delayed significantly?
No, in fact, I think success at VAN could actually speed things up. In that, if we're shown to have a second world-class ore body there, we would expect our access to capital and our cost of capital would be significantly reduced and allow us to accelerate far more quickly through stages of study, et cetera. So rather than slowing things down, I think that would just supercharge the story and allow us to move all the more quickly.
What are the chances that the market or the regulator will reward FPX for its environmental advantages, including the ore's ability for carbon recapture?
I do think that regulators should be cognizant of the types of projects that they are looking at for approval. Frankly, the environmental case, the social case to build a gold mine is not all that compelling. The world doesn't need more gold. The social and environmental case to build a nickel mine that could be one of the largest nickel mines in the world, produce nickel for a very desirable outcome like EV batteries, and thus lead to sort of reduced carbon footprint associated with people's transport options. We think that is going to factor more and more into regulators' decisions. So we think that places our project in a very good light. With respect to the capital markets, we know that there is a growing movement towards ESG-oriented funds and even generalist funds that are now investing only along strict ESG parameters. And so they're not investing in, to the same extent, in, for example, the coal business or even in the oil and gas business. And you're seeing this divestment movement affect those industries. We do think that same trend will lend itself towards investment in metals and mining, and particularly for those metals that are required for that green energy future. And nickel, as I alluded to earlier, really ranks quite high at the top of that list. So our access to capital and thus the cost of capital from that overall trend is, I think, something that's very attractive for us.
Given success at VAN and readily available capital, what is the best timeline to FS completion?
So I think realistically, a pre-feasibility study within the next 18 to 24 months, and then a feasibility study with 18 to 24 months beyond that. So I would say something in the range of 3.5 to 4 years.
With success at VAN, would you not become a likely takeover target?
Yeah, certainly. That's something that we think is almost a risk, frankly, for the company right now, is our valuation is frankly nowhere close to where we think it should be. As I demonstrated earlier on that comparative chart here, which I'll just pull up, we're not getting the value in the market that we think this project deserves right now. So yeah, absolutely. Defining another world-class ore body at VAN, I think only kind of further puts pressure on us to advance and to not be sort of opportunistically acquired.
BPH plans to reduce the company's carbon footprint by at least 30% by fiscal year 2030. Given the scale of Dakar, would FPX's carbon neutral operation have a significant impact on their goal?
Yeah, so I think you're talking about BHP there. I'm not intimately familiar with exactly what their carbon reduction targets are and by what date. I believe by and large, the diversified majors want to be carbon neutral in their operations by, I believe it's either 2040 or 2050. So I wouldn't comment on any specific company, but I would say I'm quite curious to understand how those companies plan to be carbon neutral at their operations by 2040 or 2050. There's only so much that they can do in terms of going to solar power or other types of power for their plants, et cetera. At the end of the day, we know that plugging in a world-class project at the scale of production here that has the potential to be carbon neutral would be a way for them to in part, help them to meet those targets. Because it's not clear to me, certainly yet, how they're going to otherwise meet those targets from their existing operations.
75% of PHP's nickel is now being fed directly to the EV market. With expectations for nickel demand to increase dramatically in the coming years, do you expect to see a shortage in the coming years?
Yeah, I interpret that to mean a shortage of nickel for the EV market. I think I've spoken to the fact that the nickel market is looking at a long-term structural deficit here emerging in the next couple of years. And then there could be within that a shortage for that nickel sulfate, which is the product that goes into the batteries. Absolutely. That speaks, I think, to some of the premium pricing we've seen for nickel sulfate in the market over the last couple of years. And so I would look at the nickel market as a whole and not, I think a shortage in the overall nickel market means a shortage for nickel sulfate, as well as, frankly, a shortage for ferronickel and other different types of nickel products as well.
Please discuss the timeline needed for permits in the province of BC.
Typically, the first major stage for permitting for a project like this in BC would be the submission of what's called a project description. That's the first document that the proponent or the company typically develops in consultation with First Nations partners. And that would typically kick off a process that would last, in the range of 4 to 5 years or so of environmental assessments, et cetera, towards ultimately getting permits. So that is something that as we move towards a pre-feasibility study, will become closer and closer to getting on the radar towards developing that project description and then working towards those timelines.
Is there any surrounding land packages you are considering acquiring in 2021?
No, we control 245 square kilometers here. We have a very good understanding of all of the land package around us on all sides, northwest, east, and south. In our view, limited prospectivity for this style of nickel mineralization in those areas.
Are there any royalty agreements in place on your assets?
Yep, there's a 1% net smelter royalty that covers the entire land package here. That's the only royalty on the project.
Do you have any agreements with First Nations?
We do, yeah. We have an exploration MOU with Claston Nation, which is a key partner for us there. And so that's a very robust document that governs the terms of our relationship with Claston over the course of exploration development until a construction decision is made. So it would sort of govern that period of project development, and ultimately we would then need to move into impact benefits agreement negotiations in due course as we get closer to feasibility.
Can you summarize management/insider ownership in the company, and who are the biggest shareholders?
So management holds about 21% of the company. The majority of that is owned by our chairman and founder, Peter Bradshaw. I myself hold about a 2% interest in the company. Outside of that, this is largely a retail-driven story. There's quite limited institutional ownership, actually. The project and the company for a long time, the valuation really made it off limits from an institutional standpoint. We're starting to see more and more institutional interest in the story, but largely it's a retail-driven story. So we do see a transition to the institutional audience happening here in due course. And then there are a few high net worth investors who also hold a significant position. And so those are the other large shareholders here that are listed with a collective ownership interest of about 35% among high net worth individuals.
Now, this concludes the question and answer portion of this presentation. And now before we go, I will send it back over to Martin for final remarks.
Yeah, great. Thank you for that. Thanks for everyone attending. Please feel free to reach out to me directly with any questions you might have. You can reach me directly at ceo@fpxnickel.com. Those are emails that I see on a daily basis, and very happy to interact with people over email, on the phone, or to set up Zoom calls with anyone who wants to go deeper on the story. So thanks again.
Thank you. And once again, this was FPX Nickel Corporation, trading on the Toronto Venture Exchange under ticker symbol FPX. Thank you again to everyone in Vancouver and surrounding areas for joining us today for this presentation. Stay tuned for future presentations in your area, and we'll see you next time.